Good afternoon, everybody. It is a great pleasure that I welcome you to our traditional macro sector overview. This time we named our presentation as the opportunities and risks in the times of great change. I have Mr. Nadaraia, Tibisi Group's chief economist, here with me, and me, Irina Vakhadze, from the Tibisi capital. We will walk you through all the major trends that are shaping current environment, and we will give you our view of the future. So I would like to pass the word to Mr. Nadaraia, who will present us the macro overview.
Thank you, Irina. Hello all, and thanks for joining our webinar. First of all, of course, very difficult for us, for all of us, to observe what is now going on in Ukraine, and we really hope this tragedy and really horror, I would say, without exaggeration, will end probably, unfortunately, not soon, but at some point. So now let me return to our presentation and slides, and I'm going to present macro overview, and then Irina, as always, will present our findings from the sector's perspective. So very difficult international environment. Again, Russian invasion in Ukraine, energy crisis, global advanced central banks tightening, and in the beginning of the year, unlike expectations in the beginning of the year, the Georgian economy is doing very well, and the question is why we are resilient. In fact, now question is whether the economy is overheating or not, and the strong growth is not questioned anymore. So, of course, migration impact, as all of us know, is important. So, on the back of resilience, it's not only migration impact, but also terms of trade, like export prices, import prices, also remittances are strong, and I will discuss those briefly, step by step. So again, before we discuss the migration impact and tourism recovery, I think very important and often forgotten is that Georgia is showing resilience because our terms of trade, you see the red line, terms of trade is a ratio of export prices over import prices, is quite stable, despite strong volatility in oil prices and other commodities. Of course, this stability is more usual what you see in terms of in case of number of the advanced developed economies other than developing economies, not to mention commodity dependent economies, in which case the terms of trade is volatile, and of course exchange rate is volatile as well. So I think this is very important to mention. Now to continue with exports, so year over year export growth in dollar terms remains strong, and as you can see, on the back of other countries, other destinations rather than Ukraine and Russia, but recently also we have recovery in those countries, and mostly it's a traditional products. As you know, we publish this export list, detailed export list. And now turning to remittances. So first of all, sorry for the technical comment. So this is what you can call the official inflow of remittances, and the red one is, you can call it our adjustment, as much as we can do. So here we try to adjust for double counting, because probably some of the inflows are already counted as a tourism inflows if you include migration as a tourism inflows. Also, there are a number of other reasons. So we believe that's basically the red line is what the real remittances are. Real, of course, not in inflation-adjusted terms, but what you have really inflow, dollar inflow in the country. Of course, major adjustment is inflows from Russia. So even after adjustment, remittances are quite strong, as you can see. As you can look at, as you can see from the year-over-year growth numbers. Now, very briefly on tourism, and Irina will discuss the dynamics in industry in more detail. So the blue ones, this is tourism inflows without migration impact, so call it traditional tourism inflows, and the red one is the migration impact. So without migration, we expect full recovery compared to 2019 only in 2023, but including migration, the level will already surpass 2019 level this year. And on migration inflows itself, we believe there should be slight moderation next year, assuming we have progress in developments, some progress at least in developments in Ukraine. Well, of course, very difficult to judge. We believe this year numbers are more, of course, more accurate, more reliable. Next year, what should be the spending from the impact from migration? Very difficult to say, but again, based on our judgment, that's probably more story rather than baseline at the moment. Yes. So now in Georgia, as you know, the emigration is an issue, like it happened in many Eastern European countries. I think unlike Czech Republic, and if you look at migration balance, it used to be negative, slightly positive. So this is cumulative migration balance, slightly positive during pandemic, and now you have, based on our estimates, strong positive impact of migrants, again to normalize, we believe, next year. And of course you have very strong impact on employment. So employment without a recent migration wave is recovering itself from the pandemic, but also we believe that number of employees are added to the local market, and those employees, very important to mention that they earn much more, so they are more productive as compared to, with the average workers in Georgia. So our TBC capital growth model, so we believe this year we're gonna have still double-digit growth before the growth normalizes next year, 3.9, maybe even a little bit less, of course, due to global slowdown, but first of all, due to high base effect. So again, this normalization is very importantly on the back of also high base effect, and you can look at components, of course, strong normalization in export and other drivers, but also kindly note that here we expect lower prices, so in real terms, there shouldn't be that difference in case of exports also and also imports. Now turning to exchange rate, as you know, as you are familiar, probably TBC Capital so-called three-pillar approach. So first we try to estimate net inflows and also projection, and we believe this is GL positive. Second is real effective exchange rate, or call it average exchange rate. And here, of course, the question is average against all currencies, whether from this perspective we have overvaluation or undervaluation, simply speaking. And the third pillar is inflation target. Of course, you know that normally countries with high inflation tend to have weaker currencies, but in the short term, high inflation outlook is exchange rate positive, because if outlook is higher than the targets, then this is itself argument in favor of stronger currency, and vice versa. So in this context, we have assessment like in case of average exchange rate, so broadly probably neutral, or unlike again as the average exchange rate here, the maybe slightly negative. Of course, a lot of ambiguity. What's going to be the price dynamics next year? First of all, on commodities, but still, probably our baseline is that over the next 12 months, we're going to have probably undershooting in inflation. So maybe 3% inflation in next, lower than 3% inflation in next 12 months. But of course, very difficult to say exactly. You know, recent spike in commodity prices worldwide. So now let me discuss as much as possible. Of course, we have short presentation separately. So the red one is the seasonally adjusted inflows to GDP. So this is current account, most important components, I would say, of current account. Again, export, imports, tourism, and remittances. And after pandemic, you see that the recovery is there. So the level reached pre-pandemic levels. We expect further improvement. And here you have the GEL's average exchange rate, or real effective exchange rate. An increase here also means GEL appreciation. So you see strong correlation here. However, this was not the case historically, because of course this is not the only driver, and another driver is I would call it expectation. So this year so-called seasonality was really something on the agenda. So everybody were talking about, or let's say almost everyone, they were talking about seasonal depreciation in winter. Of course, there is seasonality in inflows. However, as you probably would agree, if everybody believes in forthcoming depreciation, so they will act in advance. So seasonal expectations, we believe, are already priced in exchange rate. And how can we see this from those charts? Very recently, there was slower growth in FX credit. You don't see it here, but larger increase in GEL credit, and stronger increase in FX deposits. So this is foreign currency deposits from the beginning of the year without migration impact, and this is including migration impact. So you see, even without deposits of migrants, you have very large accumulation of foreign exchange liquidity in the banking system, again, predominantly because of seasonal depreciations. And from this chart, you see quite a strong correlation between foreign currency liquidity in the banking system and the GEL exchange rate. So here, increase means depreciation, yes? So, and that correlation, again, works quite well until very recently, because, again, liquidity went up. However, again, even without migration impact, however, GEL continued to strengthen. Why? Because inflows were so strong that even this outflow, and it is an outflow, of course temporary, but still outflow, was not strong enough to change the direction of the exchange rate. And by the way, also, if you add here the the central bank interventions, which were more on the buying side, yes. So what we should expect next? Of course, in some form, those inflows will return back to the foreign exchange market and will cause GEL appreciation pressures. Again, our second pillar of exchange rate assessment framework, the average exchange rate, or for those of you who are more familiar, the real effective exchange rate. So this is our estimated trend, and this is the actual level, and you have just dollar GEL also as an indication. So where was average and where was dollar GEL? So here we have stronger GEL, here weaker GEL, and as you can see, we are still close or below the trend. So this is important message. Therefore, take into account this argument also, we don't believe that recent appreciation is something not unsustainable. Yes. So in other words, we don't see strong overvaluation signs of the GEL. So very briefly again on Euro USD, you know the story that unfortunately recent energy crisis has caused Euro to depreciate. Also, interest rate differential is very important. But going forward, again, at least based on recent market expectations, this interest rate differential should change in favor of Euro. Also, you have a number of other indicators. We can't cover all of this, like PPPs, etc., etc. So of course, all of us know dollar is very strong and euro is undervalued, especially from medium-term perspective. This is very important for the gel. Also, you know from our other publications that euro cycle is more aligned with gel cycle. So our baseline in the medium term is that we're going to see stronger euro rather than dollar. So Russian current account surplus historically high, but probably that's going to normalize. Probably our core view is that we're going to see slightly weaker ruble in the coming years. Very briefly on Turkish lira, record high depreciation, but very high inflation. So there are also other arguments, but I think this chart is sufficiently enough to argue that we don't have competitiveness pressures from Turkey, from the weaker lira. Inflation, it's a hot topic, of course, worldwide. So before looking at our outlook, I think this is simple, but still probably intuitive chart. So services inflation and the GDP growth, you see at least some correlation. So probably service inflation in our case is the best measure of domestic inflation pressures, and those are a bit elevated, but we believe will normalize in line with, again, GDP normalization or close to trend growth outlook. Again, now turning to our overall inflation outlook, you see very strong correlation between the GEL effective exchange rate. So this also includes, so this is of course the real effective exchange rate. It's the same indicator. This also includes prices internationally, and this is again the red one, and the yellow one is the domestic inflation. Very strong correlation until very recently. Number of reasons, including very strong growth, probably first of all. So I would call it a bit more than random walk, our GEL projection. So as you know, sounds counterintuitive, but euro dollar is probably easier, well, relatively easier to project in the medium term rather than short term, well, at least we believe that's a direction. If you look at PPP estimate, it's even stronger than 115, so should be somewhere like 122. And now this year GEL, we believe that despite there are we're going to see again strong appreciation pressures because of net inflows and also because of accumulation of foreign exchange liquidity which is going to enter FX market. So our counter argument for the stronger GEL is this one. So unless dollar weakens, we don't believe we're going to see much stronger GEL, and also inflation outlook. So that's why, again, much lower inflation outlook than we have at the moment over the next 12 months, so probably even below the target. So that's why we believe that we're going to see appreciation pressures, but that will mostly end up that will mostly be reflected in higher central bank reserves rather than materially really stronger GEL, unless the dollar weakens. We have slightly, our model indicates slight depreciation next year, probably, or I would say mostly because on the back of some weakness probably in ruble, and also probably I still believe still below target, well below target inflation over the next 12 months, and thereafter we have sort of trend line appreciation of the GEL. So thank you very much, and now I would like to ask Irina to continue with the sectoral overview.
Thank you very much, Otar. So in the sectoral overview, I will try to cover tourism and real estate, as well as transport and logistics. Tourism and real estate, we know that are the sectors that were highly impacted by the changes in the environment, and the same goes for the tourism and for the transport and logistics. And I'm going to give you a snapshot from the research that is still being implemented at the moment and will be finalized in a very near future, and we will gladly share our findings with you very soon. So let me start with the overall summary. What are the main takeaways of this presentation? So in the tourism sector, as Otar mentioned, in 2022 the recovery was driven largely by the migration. In 2023 we expect the recovery to be driven by the so-called traditional tourism rather than migration, and we will go into more details how migration will affect and is affecting the tourism sector later. As for the real estate sector, what we observe is that the sale and rent price of the residential real estate, they maintain growth trend. And the factors behind this growth are migration, the exchange rate of the GEL USD, and the increased prices on construction materials. As for the rent price of the residential real estate, we expect it to adjust in the medium term as the migration effect on the housing market will weaken. For the commercial real estate side, rent prices of commercial real estate are surpassing 2019 levels in 2022, and this trend is relevant in the shopping malls and the street retail, as well as in the business centers. As for the transport and logistics, in the second quarter of 2022, the transit cargo increased by 29% in Georgia. And this growth was mainly generated by the demand from Turkey, Russia, Uzbekistan, and Kazakhstan. So now let's dive a bit deeper into tourism, and let's look at the recovery of the international travel receipts. I will just very quickly go through that because Otar already covered this part. We see that in 2022, the recovery largely to 110% is largely driven by migration. According to our expectations in 2023, the recovery will be driven by traditional tourism. We will see the migration effect as well, but it will not. It will be on the top of the fully recovered revenues from the international travel. It is also very interesting to look at the tourism from the international traveler trips perspective. And we see from the latest data that in 2022, the recovery of international traveler trips is 54%. We expect this recovery to reach almost the same from 56% in 2022, and we expect that in 2023, the recovery will go up to 85%. Tourism, especially in the pandemic years, was highly supported by the domestic travels, domestic visits. So we see that in 2022, the domestic visits have recovered quite strongly, and they surpassed 2019 level by 20%. This is due to, there is the factor of COVID as well in this, because the borders are closed, as we know. It's not so easy to travel as it was in 2019. So we expect that as borders are open, the travel becomes more comfortable, more easier. The recovery will go down. However, in 2023, we still expect the recovery of the domestic visits to be above 2019 levels. It is also interesting to look at the source countries when we speak about the international traveler trips and how the source countries are reacting to the post-pandemic factors, to the major event, the major tragedy that we're all witnessing, and how does it affect the source markets for Georgia. We see that on this chart, we see the recovery from these countries of the traveler visitor trips, international visitor trips. And the major takeaway is that the war in Ukraine has slowed down the growth, the recovery from the EU and the US. However, on Israel and Saudi Arabia, it didn't really, it didn't impact so strongly. We still see a huge recovery. Partly the major driver, partly in Saudi Arabia, the recovery was driven by adding the air connection to Saudi Arabia, and this like strongly contributed to the development of tourism from Saudi Arabia. It is also worth to mention that one of the major contributors in the past, Azerbaijan, to the as a source country of Georgia, has now recovered like very weakly. And the major reason is that Azerbaijan still has closed some borders, like land borders, and it's still not so easy to travel to Georgia through Azerbaijan due to COVID concerns. And we expect this to be recovered in 2023. After speaking about the source countries, it's also important to look at how the happenings in 2022 impact the important KPIs of the hotels. In 8 months of 2022, we see that the average occupancy in the brand hotels surpassed its 2019 level by 19% and stood at 56%. We have estimated what role did domestic trips and the migration played in this recovery, and it is presented in the chart. As we see, migration has played an important role in 2022, and it will continue to play significant role in the coming past. However, in 2023, the domestic visits, will not be the driver that will recover the occupancy above 2019 levels. We also see the impact of migration on the occupancy levels, and it constitutes 9% in terms of recovery in 2022, 8 months. Why do we have such a strong recovery? Well, the reasons behind this strong recovery, first is the low base of 2019, and then there is the strong recovery of travelers from the higher spending countries. Then we have the statistics that the travelers that come to Georgia, they stay in Georgia for a longer time than they used to in 2019, and this certainly impacts the occupancy levels. And so these are the major drivers behind the recovery of the occupancy. As for the ADR did not follow the same trend of the recovery as compared to the ADR did not follow the occupancy trend, and it hasn't still recovered to 2019 levels. We see that the recovery in 8 months of 2022 is 89%, and we expect the ADR to recover to 2019 level and go a bit beyond only in 2023. One reason behind that is that hotels maintain high occupancy and their competitiveness through the relatively stable prices in these difficult times for travel. And also in 2023, well, we know that the projects that were planned in 2019 have paused due to pandemic, so there will be an increase of the supply in the coming years, which will certainly negatively have that negative pressure on the ADR. So this is very briefly about tourism, and now let's go to the real estate and let's look what are the major trends in this important sector of the Georgian economy. So the trend, to give you a snapshot of the trend, we see that all the major indicators, the sale price of the residential real estate, which is the blue line here, has increased by 27% year over year in August. We see that the sales in the square meter terms has also increased by 27%, and we see the highest increase in the rent prices. So we will speak about the reasons behind these results. But before going to that, it's very important to mention migration in the real estate context, because this is one of the sectors that was largely impacted by migration, especially on the rental market. So we estimated the impact and the share of migration in this sector. And according to our estimates, in 2022, in the sold apartments, 10% will come on the migrants. As for the rented apartments, here the share is much larger and is 30%. In 2023, we expect the share of the migrants in the sold real estate properties to go to 12%, and the share of migrants in the real estate rental market to go down to 18%. So let's talk about the reasons behind the trends and the increase of the real estate prices, recent increase. On this chart, we see the rental yield. This is the green line here, and we see that the rental yield on real estate, residential real estate, has reached the historical maximum. We also see that the red line indicates here the increase of the rent price, and the rent price, the increase of the rent price has certainly resulted into the increase of the rental yield, and it also pushes the prices of the residential real estate as residential real estate becomes an attractive investment. However, we expect the rent price and the rental yields, to correct, adjust, and to return back to the average long-term rental yield, which is the dotted green line on our chart. The second reason that explains the increase of the residential real estate prices are the exchange rate fluctuations, and according to our analysis, they nearly explain 50% of the change in the housing prices. If we look at this chart, this relationship is clear. We see that when the USD gel becomes appreciated, the real estate prices go up, and on the contrary. And the third reason that is behind the increase of the real estate prices is something that we have observed for a long time. Certainly since the pandemic, actually, is the change in the price of construction materials. Since COVID, we saw a huge increase of the construction material prices, and this change with certain time lag is reflected in the real estate prices. And it is also important to speak about the supply. When we're speaking about the increase of the prices on the real estate market, it's also important to observe whether there are signs of the redundant supply. According to the construction permits data, we don't see any significant increase in the first half of the year. We see here that the result of the 6 months 2021 and then the result of the 2022. So, however, it will be important to closely monitor this indicator and to analyze how the signals on the market, the existing signal on the market, incentivize the investors to increase the supply. As for the expectations, in the real estate market, we in 2022, as I already covered a bit earlier in the presentation, we expect the real estate sold area to increase by 23% year over year. In this increase, with the red block, we have identified the migration effect, and in this effect we mean both like direct impact and indirect impact. With indirect impact, we imply the effect that the migration increased the prices on the rental market, so the real estate prices properties became interesting investment opportunities, and this led to the increase of the sales, not only among migrants but also among the other individuals, residents or non-residents of Georgia. In 2023, we expect the area, sold area, to increase by 13%, and it will be mostly led by the migration. And in 2024, after a strong 2 years of strong increase of the sold area, we don't expect increase in 2024. As for the sale price, in 2022 we expect the sale price to increase by 16%, and as I already mentioned, this will be also led by the direct and indirect impact of the migration. In 2023, the impact, the sales price will increase by 14%, and the impact will be even larger, as the migrants who previously were in the rental market, they will start slowly shifting to the sale market and purchase the properties. And in 2024, we expect the sales price to go down by 5%. As for the rent price, we see that the impact of migration is significant. We expect the rent price to go up by 66% in 2022 compared to 2021, and the red bar indicates the impact of the migration, which is significant. In 2023, we expect this change to be 11%, and as you see here, the impact of migration diminishes significantly, and it's like marginal, and because due to the reason mentioned just a few minutes ago. And in 2024, as we said, the rent price will slowly adjust, and it will reduce by 17% year over year. I would also like to cover very briefly another part of the real estate, and that will be commercial real estate, and we'll give you the basic figures. So in as I said in the summary, the major trend is that the rent prices are recovering and surpassing 2019 slightly. However, still they are on a positive trend. In 2000, and this is observed in shopping malls, we see that in 2000 the price was $26, and then in 2022 the expected price is $27. The same is observed in street retail. And in business centers, we see that there is not a significant increase of the price. However, the business centers manage to recover to go a bit beyond their 2019 level. As for the occupancy, we see that the occupancy rates are varied. The shopping malls and the street retails, they manage to almost go back to their 2019 levels. That 2019 in the shopping malls was 10%, and in 2022 it's almost 10%. However, the picture is not the same in the business centers, which is like not surprising because we have the hybrid model. The employees are still not fully back in the offices, so and we don't expect a huge recovery in the business centers. As for the transport and logistics, I will just give you a very brief snapshot, as promised, from our research, and we will give you the whole research in 1 month. In 6 months, total cargo increased by 5% in Georgia, and this increase was mainly driven by the railway cargo. And then if we look at the transit cargo, as I said, was increased by 27%, and we see that the road cargo increased by 38% compared to the previous year in the second quarter of 2022, and the railway increased by 19% year over year. Yes. So these are the major findings on the 3 sectors. With this, we will finish our presentation, and now we are ready to answer your questions. Please, as advised before, send them in the chat, and we will gladly answer them. Thank you very much. there are, I think, questions coming, so I will just take a second to read those questions aloud. And so the first question is that in 2022, aside from migration, most tourism came from Middle East, plus Azerbaijan, plus Armenia versus EU. Actually, that is the most tourism in 2022. If we look at the chart, came from the neighbors. Azerbaijan did not play such an important role because its recovery is not significant. However, it came from the neighbors plus Middle East. That is very true. Economic in Europe caused less. In 2023, economics recession in Europe caused less European visitors. In 2023, this could slow down the recovery from the Europe. However, we hope that the factors actually at the moment that are mainly slowing down the recovery from the US and the EU is the a bit insecurity of the region. So we hope that in 2023 we will have a clearer picture and the travelers will have clearer picture on the region, and the visitors from the EU and the US will recover more. Maybe Otar could also elaborate on the recession and the impact of the economic.
Yes, I would also agree with Irina. That's very important. And on the growth outlook, again, assuming that migration and those unfortunate events already peaked this year, so we expect slower growth because of, again, global and EU slower growth, and also high base effect next year. Yes.
Thank you, Otar. So I will read another question. What's reasons to expect decrease of residential real estate rent rate in 2024? As mentioned before, the reason that push the rent prices up is the concentration of migrants on this market. So we expect that at some point this concentration will not be so strong, and the migrants who decide to stay in Georgia and live in Georgia will shift to a long-term investments, like they will purchase the real estate, and part of the migrants will leave Georgia. So this is based on this assumption. Certainly there is no certainty that this scenario will develop. However, that's one of the visions of the future. Another is a question regards whether we have the regional data. This hotel occupancy is gathered by Tbilisi Capital Survey, and we cannot always generalize it according to the regions. Can we see the, I think, Otar, this question is for you. Can we see the expectations on GEL USD again? I think they just want to take a look at the chart. Okay. Let me also say that this presentation will be online, available online on Tbilisi Capital's webpage. So please visit the webpage, and if you want to keep the presentation and take a look at it later, you can download it.
Yeah, I guess that was a chart or table, and as I said, so very strong inflows, and also the inflows also from the accumulated buffer, yes, what you call excess liquidity in the banking system, foreign currencies this year, but because of strong dollar and argument of average exchange rate, real effective exchange rate, probably it makes sense not to get it too strong, and also because of moderation inflation argument. So we don't bet this year, despite again very strong inflows. We don't bet this year on much stronger GEL, just we bet on strong inflows and higher central bank reserves. and thereafter you see the direction for the reasons we explained. Yes.
Sure. There is another question for you here.
Okay.
So the same person asks, as I understood, did I understand that inflation is expected to be 3%? What does this include or exclude? It should be, does this include or exclude gel appreciation and migration effect? I have the impression inflation would be higher than 3%.
Yes, so in fact it's 2023 inflation, which is 2.4%, not 22. So this year inflation is projected at 9 or maybe slightly higher, 9.3 or something percent. So this year again, we already have slower inflation, lower inflation in case of imported inflation and also mixed products, and we have slightly more lagged moderation in case of domestic services. So basically, the projection, our projection is based on recent commodity price and also projection of commodity prices such as oil, wheat, sunflower oil, sugar, etc., and also domestic developments and the link between domestic demand and predominantly services and other domestic goods. Also rental price, as Irina mentioned, is very important for our outlook. So this year is 9+ if you think of year over year. And by the way, this year, even this year, year over year inflation would be 10.5% December. So only 1 percentage points lower compared to 11.5 years. So that already implies that if you look at, or if you think about monthly seasonally adjusted annualized inflation, so in coming months it's already on target. Yes, it's already on target. And we have, as you probably were referring to, we have quite bullish target in 2023. So on gel, we have slight depreciation of the gel against USD, but not necessarily of gel average, or call it real effective exchange rate. Yes, because we expect slightly weaker ruble, etc. So more details. By the way, yesterday, it was Monday yesterday. Yes, we published the weekly update from the chief economist, and it's all about inflation and inflation outlook. So if you are interested, you can have a look. Yes. Thank you.
Thank you, Attar. I think there is one question. As there are expectations for global real estate crisis similar to 2008, how significantly it will impact Georgian real estate market if such happens? So I will answer it, and maybe you could also elaborate, Attar. At the moment, as we slightly mentioned in our presentation, we don't see evident, very vivid signs of the market overheating. So we see that the rent price has increased, and we expect that this is due to the temporary impact, and this will go down and adjust in the midterm. We don't see the huge increase of the supply, and for these reasons at the moment we are saying that we could be cautious and monitor the increase of the rent price and monitor the increase of the supply.
Yes, thank you, Irina. So thanks, very interesting, very important question. So I believe there is no direct pass-through, call it from various real estate markets to Georgian real estate markets. Of course, there is pass-through in economic terms. If you have real estate burst, I mean, that's going to impact overall health and health of the economy, and that's probably the baseline. I mean, you know the story about elevated prices in a number of cities in Canada and elsewhere. So for Georgia, like as Irina mentioned, and by the way, this is also discussed in details in Tibisi Capital paper on overheating, whether Georgian economy is overheating or not, including real estate market. So there we have a number of indicators such as price increase, and as Irina mentioned, dollar price also depends on dollar gel exchange rate. So if you think of bubble, you have to look at real price in national currency. That's basically internationally accepted indicator, and which also tends to work also in Georgia. Also, number of other indicators like price to rent ratio and also rental yield compared to most conventional instrument of savings, which is, we believe, is a dollar deposit rate in Georgia. So based on those arguments, we don't see any strong signs of bubble in Georgia. What is not sustainable, as Irina, I think, well explained, what is really not sustainable in our case is the high rental yields, which we believe will normalize in coming years. Yeah. Thank you.
So will it be possible to watch a recording of this webinar later? Certainly, we will post the recording of this webinar on our website. So those who were not able to be with us can watch it later. Then there was about the sharing of the presentation. We can share the deck afterwards. And I think they would like to see the chart of the, exchange chart, right? Sorry, it was, how did you estimate? Could you please kindly explain again the relationship between gel appreciation and rising rental? Actually, it was. So this is the slide. However, it's not the rental, right?
Yes, yes. It's a real estate price. So basically, the blue one is real estate price in dollars. Yes. And this one is USD gel inverted, so you can call it simply gel USD. So this means gel appreciation. So again, if you think from a perception perspective, so everybody would tell you in Georgia and also probably a number of emerging economies that the price of real estate is in dollars. So that's how all of us perceive the real estate market. However, kindly note that, so for example, whenever dollar is stronger worldwide, so it becomes stronger against, call it everything, commodities, etc., etc. So real estate market also has to adjust, yes. In Europe, it adjusts automatically because European real estate prices are in euros. Also, perception is in euros, not in dollars. In countries like Georgia, it's still, again, the perception and is in dollars. So the combination of those two leads to the relationship where, simply speaking, real estate price is half in dollars, half in gel, what we call it. So basically, it is resilient. It does not follow the gel depreciation, but probably it is resilient by slightly more than 50%. So, so if you have around 10% depreciation of gel against USD, so you would expect something like 4.5% drop of real estate prices in USD terms, not in gel terms. So whenever gel is weaker, the gel real estate prices are higher, higher in Georgia. So that's basically the relationship what is illustrated on that chart. Yeah.
So thank you very much, Otar. So as far as I see, I think we can wait 1 minute, for 1 minute if we have any additional questions, and if not, then we could finalize our.
If you have further questions, I mean, contact us anytime, also via email. That's also fine.
I'm being notified that we don't have any additional questions, so I would like to thank all of you for staying with us, for listening, for posing interesting questions and discussing these important issues with us.
Thank you very much. Thank you. Thank you, Irina. And thanks, team.
Goodbye.
Bye.